Good morning, traders. It is Tuesday, August the 6th. Taking a look at the charts yesterday, pretty big day. We were in position for it. It really was a perfect day for us in the equities market. We've been talking about this recent price action feeling and looking a lot like the May top, and how we could get at least a one-wave correction. We could get an ABC correction, a two-wave potentially going forward. And here we go. Yesterday we had massive, looks like a washout sell-off in the market, really collapsing. It's one of the biggest down days. I think it is the biggest down day of the year in a very long time. And everyone's panic selling. We saw the VIX spike. We've seen the put call ratio go up to about 1.3, which means everyone's buying downside protection, fearful that the market is going to crash. And if we look on our custom indicator here, we're up over 9, anything over 8, and we are in usually a fairly significant standout lower in the market. And as long as the long-term trend remains up, this should be more or less a standout pivot low in the market, but I'll show you more of that in just a second. But when we look at the price over here, you can see yesterday's drop. We got out some of it. We scaled out a quarter of our open position, and we still have a quarter of our current position. And you can see today, yesterday I talked about how I feel as though there's more downside and we might exit our position today if we get some more downside. When overnight trading, we saw the market sell all the way off, all the way down below the 200-day moving average, which is similar to the May here where it tagged the 200-day moving average. It went through it, and since then this morning it's rebounded. So it dropped 1.5% more after the close last night. And since then, bargain hunters have piled in and started going in. The VIX is dropping, and this could be the big question is this a strong V-shaped recovery, something where we saw the market sell off and then take off, or is it just going to be one of these oversold bounces where it gets oversold and has a 2 or 3 day bounce and then continues down to go deeper? And that's the big question. So we're still in a downtrend. In fact, if you look at the chart analysis here, we just kind of zoom into this chart, we really just started getting red bars. We went to orange. Orange means we're getting into a trend change. We got short. We've scaled out of our play as it drops further and further, and the bars just started to turn red. You can see back here in May when it went orange, started to drop down, and the type of price action we are in right here is this is what we saw yesterday in the grand scheme of things. Is this big drop right down here. We saw a huge gap over here as well, and the market spiked up, panic selling in the market, anything over 9, usually very significant pivot low, and usually we see a bit further selling the next day, and then the market can rebound. But overall, we are still in a downtrend. We're just turning red bars here, and we could be in store for just a 2 or 3 day bounce and then a fade lower, or we could continue to see it go up. So we'll see where this final little quarter position remaining of our trade here goes. We've locked in most of the gains, so now we're just going to let the market kind of do its thing. I'm tempted to pull the rest of that trade off, just close it out in case we get a sharp V-shaped recovery. Then we'll end up not making as much on it, but we did lower our stop. Make sure you go to our live portfolio, check the current stop on SDS. We brought it back, we raised the stop on it so that if the market starts to rally, we still make profit on that last little bit of the market here. Now overall, if we look at the panic selling indicator in the top, if we go back in time, you can see some of these previous standout lows in the market. And really what it is when we get into these panic sell-off spikes, usually gives us a day or so, we see the market flush out these kind of big standout highs. And that's kind of where we're at. In terms of the trend, we are just starting to turn down on the real-time charts. So we could see it just get this type of bounce and then continue to go lower. But again, we don't know. No one knows where the markets are going. All we can do is use our analysis, follow the market as close as we can, and more or less, I've spent a lot of time analyzing and really getting a feel of the SP 500, the broad market, where they should move next and how they usually kind of trade. So we'll see how things go. We do have a huge gap here. If we just zoom into this price action to give you an idea, gaps tend to get filled, as we know. Here is a gap that happened last time. This gap happened on a huge spike down in volatility. very similar to what we saw today or yesterday, and the market came up and filled this gap window. This is the gap window, and gaps get filled, and then the market continued to sell off and go lower. So if we look at the hard right edge, look at the price action, you can see yesterday we have a big gap here. The market could very easily, it's ripping higher already in pre-market. The bottom of the gap acts as resistance, the top of the gap acts as resistance, and then there's kind of a pure gap area. Sometimes just the pure gap area fills, not from the closing price to the opening price. But overall, I'm expecting the market to work up. It could go back and fill this gap before potentially rolling over and going down to some new lows and continuing. So that's what we're in place. The trend really just turned down yesterday, the last hour of the day, and we could see kind of a very strong rally here, but the trend could still remain. This will be a short covering rally, and the market could still fade after that for much larger gains going forward still. Now let's take a look over at Let's go take a look at gold. Gold, I was pretty tempted to take some money off the table early in the morning. Our play was up almost 10% from our entry. It's trading higher again today. The main reason is we're up almost 10% on our UGLD. But if you take a look at the dollar gapped all the way down and came down to support the 20-day moving average, the top of this gap window. With currencies and commodities, you can't really look at gaps too much as an area because commodities clearly trade 24/7, and I don't use gaps for commodities or currencies. But overall, if you look at the price action, it happens to be where there's 3 days side by side. It's the 20-day moving average. It's also this previous significant high in the market. So it's come down to support. If the dollar bounces, we'll see gold pull back. And if you look at the dollar index, you can see here yesterday it dropped down to this green line, which is the 20-day moving average on our 30-minute chart here. Lime green meaning it is technically oversold and it's at support, and we could see the dollar bounce, which means metals could be under a little bit of pressure with a bouncing dollar. But again, they're the safe haven play. Money is going to be probably fearful and continuing to move into those potentially over the next few sessions, as everyone got shocked yesterday with the fear in the market. Now, if we take a look over at, let's pull up silver. Silver's up 1/4% this morning. Gold relatively flat. Again, silver is always going to probably lag a little bit. Gold's kind of popping to the upside. Same with gold miners. Silver kind of flagging out just like it did before, kind of lurking in the back. It's usually a secondary pop. We'll see it potentially pop and take off. I like silver the most. I think long term it's got the best upside potential of all the precious metals. And of course, silver miners will do exceptionally well, which is why we got in place. So hopefully we'll see silver continue to hold up. It is looking like it is at the upper end of its channel. We could continue to see it flag out. This is a big pattern that it had to the upside. It could flag longer still. So we're just sitting pretty, letting the market do its thing. Hopefully we see the precious metals sector continue to rise with fear, and we see silver break out to the upside. Looking over at, let's pull up miners. I know a lot of you have got miners, GDXJ here. GDX, GDXJ, and SIL are very similar. The gold miners obviously outperforming a bit more to the upside, but silver will play catch up down the road. And we had a nice pop to the upside. Hopefully it'll hold its ground. Maybe it'll trade sideways. But again, the trend is up, and we are in position for the metals. Looking at natural gas. Natural gas had that big sell-off yesterday. We got down to 202, pretty much 203, and it's having a bit of a bounce there. Overall, long term, looking for it. We wrote an article a couple months ago saying we were looking for $2. We're getting down to that area. Now we're going to start looking for some type of bottoming formation. If we do get some huge washout low that goes below that, we may look to stick our neck out and get into a small position for a knee-jerk reaction and a significant rally. But overall, it's getting down to this area. We're looking for a pattern, maybe a pattern that'll take a couple months to form, some type of bottoming formation. We'll have some following trend lines here. If we were to just connect some tops here, we can start looking for, we got this falling channel in price. If it can start to break through that area, potentially cause some type of resistance area and start to break through, we could see a really significant rally in natural gas. But you look at these bars. Each bar here is 1 month. So the section here. So we've got a few months. We've got potentially a month or three before something significant, I think, sets up for natural gas. Crude oil up 1% today. Let me just zoom in a little bit more here. Get back on the daily chart. If we take a look over here, it's still continuing to hold this pattern. It did sell off yesterday, kind of rebounded. Overall, these are inside bars. Inside bars are typically bearish. Inside bar means all the price action is locked in one big negative bar, and it's forming what looks to be a little bit of a little bear flag, so you got to move down. You've got the bear flag, and the second half of that move could come down somewhere over here, which just visually, the distance from the top to the bottom is usually where the next move down is. And we're still looking at this potential 51, 52 area downside for crude to go. Let's take a quick look at bonds. Bonds, nice rally, lots of fear in the market. We started to see bonds turn up a few days ago. If we take a look at our little trend indicator here, you can see we've gone from red bars to orange bars for bonds, turning into a bullish market, and bonds have really taken off. The daily chart crystal clear how it's popped to the upside. Again, looks like last night in overnight trading or this morning was washout low in the market, and bonds are putting in a top now. So it's going to be pretty wild price action all week, and the markets are going to settle out. We could see the VIX fade fairly quickly. I talked about it yesterday in the post-market update. More or less the VIX popped up, and today it's trading down about 12% this morning. Ideally, I'd love to see a continuation selling and see the VIX spike much higher. If we go back in time on the VIX, let's just go back in time on the VIX. I would love to see some continued selling over the next couple sessions and see a bigger sell-off. Obviously, we want to sell off. We are in place for it. And if the VIX can get up into this 30 area, even 28 area, could be a great opportunity to buy puts or short the UVXY if you can get it early in the morning. There's only a certain amount of shares you can short of it each day, so you got to get in fairly early. But I'd love to see a spike here and then watch the volatility collapse over time again and play that. Anyway, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.